The year 2025 is a turning point for cryptocurrency, marking its transition from fringe experiment to a core pillar of the global financial system. Institutional capital, government action, and corporate strategy are converging around Bitcoin and digital assets, making their integration into mainstream finance inevitable. What sets 2025 apart is the maturity of the market, no longer driven by retail hype, but by calculated moves from major corporations and governments. Public companies are now holding Bitcoin as a key reserve, and the US government is actively building regulatory frameworks and accumulating digital assets. The approval and success of spot Bitcoin ETFs in 2024 opened the floodgates, but 2025 is when the real transformation is happening. Traditional finance infrastructure is merging with decentralized technology, creating new products and career paths. The industry is growing up, facing challenges like volatility and regulation, but the momentum is undeniable. This year is defined by bold corporate bets, decisive government action, and relentless innovation. The groundwork is being laid for a future where digital assets are an essential part of everyday economic life. In 2025, publicly traded companies are making Bitcoin a primary treasury reserve asset, moving beyond speculation to strategic adoption. MicroStrategy led the way, amassing over 500,000 BTC, but now firms worldwide, from Semler Scientific to Japan's Metaplanet, are following suit. Announcements of Bitcoin-centric treasuries have triggered dramatic stock surges, incentivizing more companies to join the trend. Even Trump media's billion-dollar Bitcoin plan made headlines, fueling mainstream excitement. However, this strategy carries risk. Many companies bought Bitcoin near $90,000, so a downturn could trigger margin calls and forced liquidations. The corporate embrace of crypto is a powerful vote of confidence, but it also introduces new systemic risks. As more companies adopt digital assets, the stakes and the potential consequences are higher than ever. The era of Bitcoin as a corporate staple is here, but it's not without its challenges. 2025 marks the year the US government shifted from cautious observer to active participant in crypto. A landmark executive order established a national Bitcoin reserve, making the US a major holder and aligning its interests with the network's success. Regulatory barriers are falling. The repeal of SEC's restrictive rules now allows banks to securely custody digital assets. Major legislation, like the Genius Act for stablecoins, is set to pass, providing clarity and encouraging innovation. Proposals for Bitcoin-backed US Treasuries signal even deeper integration of crypto into national finance. Regulatory uncertainty, once a major obstacle, is giving way to clear rules that attract institutional capital. The US aims to be a global hub for digital asset innovation, reducing risk and fueling industry growth. This government-led embrace is fundamentally reshaping the investment landscape. The first quarter of 2025 reminded everyone that crypto's volatility is far from over. Despite adoption milestones, economic uncertainty pushed investors towards safer assets, hitting crypto hard. Bitcoin soared to a new high in January, then sharply corrected, ending Q1 down nearly 12%. Ethereum fared worse, dropping over 45% due to upgrade delays and fierce competition from faster blockchains like Solana. The market's future is uncertain. Bearish analysts see Bitcoin falling to $59,000, while bulls predict new highs above $130,000. Ethereum's fate depends on delivering promised upgrades and defending its dominance. The only certainty is that volatility and competition remain central to the crypto story. 2025 is a test of conviction for both investors and developers. Institutional adoption is no longer a promise. It's reality in 2025. Wall Street giants like BlackRock and BNY Mellon are building crypto infrastructure and expanding their holdings, signaling long-term commitment. US banks are ready to integrate crypto products, pending final regulatory clarity. The skepticism of the past has given way to a recognition of digital assets as a major growth opportunity. A wave of crypto-native IPOs, eToro, Circle, Gemini, BitGo, will give traditional investors new ways to access the ecosystem. The global crypto market is projected to more than double by 2030, driven by institutional capital and trusted services. Wall Street's embrace is creating a flywheel effect, attracting even more investment. Crypto is now a permanent fixture in the global financial system. Stablecoins and tokenized real-world assets, RWAs, are two of crypto's fastest growing sectors in 2025. Stablecoins, now with over $200 billion in market cap, are the backbone of digital finance, offering stability and global access. Clear US legislation is set to accelerate their adoption, making them even more integral to the financial system. Meanwhile, tokenizing real-world assets like real estate and government bonds has unlocked nearly $20 billion in value. BlackRock's BioIdle fund, which tokenizes US treasuries, tripled in value, showing huge institutional demand. Tokenization makes assets more accessible, liquid, and efficient, opening new investment opportunities worldwide. The fusion of traditional finance and blockchain is one of the industry's most powerful growth drivers. Stablecoins and RWAs are quietly revolutionizing how value moves in the digital age. Beneath the headlines, relentless innovation is redefining digital finance. DeFi is offering decentralized alternatives to traditional financial services, while NFTs now represent everything from event tickets to intellectual property. Layer 2 solutions like Polygon are making blockchains faster and cheaper, paving the way for mass adoption. Eco-friendly blockchains such as Cardano and Solana are addressing sustainability concerns and gaining traction. Crypto is becoming part of daily life, with Visa and MasterCard enabling crypto spending at millions of merchants. Millennials and Gen Z are driving adoption, preferring digital assets over traditional investments. This generational shift is a powerful tailwind for the industry's future. The next wave of growth will be fueled by innovation, accessibility, and changing demographics. Despite progress, crypto remains a high-risk environment. Major exchange hacks like Bybit's $195 million breach can trigger market chaos and massive withdrawals. Market manipulation and spoofing remain threats, misleading investors and distorting prices. Security is paramount. Not your keys, not your coins. Use hardware wallets and strong security practices. Phishing scams and weak passwords are common pitfalls. Vigilance is essential. Do your own research before investing. Diversify and never risk more than you can afford to lose. The opportunities are huge, but so are the risks. Staying safe requires education, caution, and constant vigilance. In 2025, crypto is no longer niche. It's reshaping the global financial system. Corporate adoption, government regulation, and institutional integration are making digital assets part of everyday life. Soon, crypto services will be standard in banking apps, and retirement funds may include digital assets. Tokenization will democratize access to investments like real estate and art, once reserved for the wealthy. Blockchain technology will bring transparency and efficiency to industries far beyond finance. Challenges remain privacy, scalability, and volatility, but the direction is clear. The crypto revolution is rewiring our financial infrastructure for a more digital, decentralized future. Whether you're an investor or an observer, these changes will touch us all.